Let's go ahead and dive in and just build a simple scenario here. So if we wanted to add a new scenario, we could call this down case. We'll choose our revenue accounts we want to work with. Let's just go with sales here. Let's add a new assumption to our sales. Right now, it carries over what we have with our financial model. So let's just attach a growth rate and say, negative 10% month over month over what we had anticipated in our financial model. And with that, we'll also cut down our expenses a little bit. Maybe we cut down our advertising and marketing spend. Let's add an assumption here. Let's say we decrease our advertising and marketing spend by negative 10%. Really quick, I'm going to change our end date, the end of this year. Then we'll save our assumption. And once we're done, we can go to our summary. All right, so now in the summary, we can view our forecast, our baseline financial model against the scenario. You also see it charted out here. We can see the discrepancies, and we can, of course, edit the scenario as well. We could do the same for cash flow. So we can view our forecast against the scenario, as well as see it charted out here. But finally, our last step is to go view the scenario. So when we press view scenario, we see our scenario against our forecast, and we can see the percentage variance in terms of revenue, in terms of COGS, in terms of our op expenses, and ultimately EBITDA and net income at the bottom of our screen here. And of course, we can edit columns just like we do in the financial model.